Hey everybody, hey traders, Chris Barber here, just after closing bell on Friday, August 8th. Hope everyone had a great trading week. It ended up being exactly what I thought it was going to be, which was a inside week, meaning we have a high from Thursday the 31st, and we have a low from Friday the 1st. And even though price had a rip on Monday, it proceeded to still make highs on Thursday, Friday, but not enough to poach the highs or break the highs, not even test the highs. Next week, major news is going to be U.S. inflation. Is that enough to get the market to go somewhere? If inflation comes in higher than expected, if the headline for yearly CPI or core CPI is higher than expected, or even for PPI for that matter, do we end up maybe testing the highs with more overbought conditions and divergence, and then ultimately to fade? Remember, August, seasonality wise, Europe's on vacation. Uh, Families are still taking vacations in the US. Kids are going back to school in a couple weeks. Things are a little bit slower in August. It's kind of the perfect time to catch the market off guard and catch it by surprise. This year, I suppose the melt up wouldn't be a terrible surprise because it'd be wishful thinking. But somehow, I think that there's a lingering correction in this market that still has to come back to at least test this 50-day moving average, at least pull back and find some previous resistance levels, at least find some dynamic support. So that doesn't make me bearish. It just makes me very patient. I think if this market just stays sideways, I'm going to keep trading and selling highs. I've actually done very well these last few weeks by just selling highs, collecting some income, and trying to sell nice and high with index premium. And then the portfolio, just adding cover calls, rolling cover calls, just sticking to really solid like income generating option strategies. But when it comes to what we've been dealing with in 2025 and where we are right now, I do wonder when it comes to the Fed. Okay, rumor mill keeps swirling. Powell's under tremendous amount of pressure. September 17th and onwards, the Fed's looking to cut rates 25 basis points September, 25 basis points in October, and 25 basis points December. Now, what does that do to the bond market? What does that do to U.S. 10-year yields? Okay, let's go to U.S. 10-year. Right now, the last 4 days, 10 years have actually gone back up. We are no longer near these Liberation Day lows. We are not near the markets when we were tanking to the downside in March and April. Just like what happened in 2024, if the Fed cuts by 75 basis points, are we going to see 75 basis points of yields going higher or 75 basis points of yields going lower? That seems to be the one thing that the Trump administration isn't understanding right now, is that the bond market, if we are going to see yields rally or yields raise, up into 4.6, 4.7, 4.8, that's not a good sign. That's going to be the same reason we kind of choked off growth and it's continued to stretch the consumer and stretch businesses where borrowing is going to